Hey, my name's James Nicholson and welcome to the weekly mortgage roundup. We've been doing this for a few weeks now. It's really popular with you guys. And what we do on this video is we go and have a look at what type of rates we can get for HMO mortgages, which is this slide here, which is a house of multiple occupancy, if you don't know what that means. We look at buy-to-let mortgages through a limited company. We also look at buy-to-lets in your personal name, and we look at residential mortgages with a big deposit and a small deposit or equity, depending on that. Now, this week is important. So something's happened today, which is the US have got their inflation data out, and it's not good. Inflation has gone back up in US terms. What that means is unlikely that the Federal Reserve is going to now reduce interest rates in June. This is not what we want to hear at all. So what's my advice to you? Well, what I think will happen over the next few days is the swap rate, which with the bank rate that they borrow at, might go up a little bit. That means lenders might start putting rates up a little bit. This is going to be the game this year. Rates go up, rates go down. A lot of you comment on it and say this is all very similar and repetitive, but this is what is going to happen. So it's likely that rates might temporarily go back up. So if you've got a deal that expires in the next 6 months, have a look at fixing a rate today. Some people get confused about this. So here's what I mean. What you can do is you can go to your lender, your existing lender, and you can ask them to give you a rate today. In fact, often you can do this just in an online portal. This company here that we've got on the slide here, the Mortgage Works, I just did one for a buy-to-let online. It took 2 minutes to do. So you can fix the rate today. Maybe your deal doesn't expire till September. And between now and September, before that new deal starts that you've agreed, if rates go up, which they might, you don't have to pay that higher rate. You fixed your rate today. You've got the deal. If, however, the rates drop, which could also happen, then you can move on to the better deal because you didn't start your new one yet. Right? Hopefully that makes sense. Let people know that as well, because not lots of people know that, and it's good information to know. So before we jump into this, as always, if you haven't done already, do subscribe to the channel down below, round about there somewhere. Subscribe to the channel, hit the bell notification. We've got new content every single day. This is a weekly episode, and while you're here, smash the like button, tickle the like button, do something to the like button, hit it really hard, because that helps us with the YouTube algorithm. Maybe you get annoyed with me asking, well, smash it. That will take some of that frustration out. So go and do that now. So let's have a look at what rates we've got this week. I think this is important to know. We had some videos this week. HSBC drop rates. Are they in this week's data? We'll see. So first slide is for HMO mortgages, and that stands for House of Multiple Occupancy. That's where you rent a room out on a room-by-room basis, like student accommodation. A lot of landlords now do this as a service for professionals as well. So HMO mortgages, the 5-year rate with Mortgage Works is the best one I feel on the market at the moment. It's 5.34%. The fees are 3%, which are quite high, but they're improving. They were 5% a few months ago. Loan to value 75%. 2-year deal is 5.39, 3% fees. Loan to value 75% as well. So that's the Mortgage Works. Let's look at the limited company buy-to-lets. What does this mean? Just in case you're unsure. If you buy a buy-to-let now, which I'm doing this week, you should buy it through a company. The government have just got all this legislation coming out to make it difficult to own property in your personal name now. The tax is crazy. Now, rates are a little higher, but you can write stuff off. You can put your mobile phone bill through this. You can put petrol costs through this. You can deduct expensive if it's through a limited company, which you can't do if it's in your personal name. So the 5-year rate is the same, 5.34, 3% fees. Mortgage Works is the best lender out there. Again, they often are. Mortgage Works are very, very competitive. They're part of Nationwide, and they always have good rates. You'll always see them with your broker or on a comparison site as one of the better lenders. On a 2-year deal, they've got under 5% now, so it's 4.99%, which is good. Getting closer to being sub 4%, which is what we want to see. 3% in fees, 75% loan to value. So if you run a limited company, this is what I would recommend. Mortgage Works should be your first port of call. Next, buy to let in your personal name. Now, like I said, now new buy to lets that you get, you should put them in a company, but most buy to lets are in a personal name. The majority of deals that are out there at the moment. So NatWest, they've been really aggressive. They've been fighting with HSBC and Barclays on rates, which is what we want to see. We want to see these guys fighting between each other to win our business. 5-year deal was 4.37. That's a big difference compared to limited company, isn't it? So in a company, they charge you higher rates, but the tax efficiency means it's worthwhile. But in your personal name, it's 4.37%. Getting close to being under 4% there. 995 in fees, 75% loan to value. The 2-year deal is 4.74%, and the fees are 995 here. So this is, if you've got stuff in your personal name, it is way cheaper on the fees on this compared to the Mortgage Works deals that we just saw there. So that's good. So this is probably your best option in a personal name. Next, residential mortgages. So these are if you have a 25% equity stake or a 25% deposit on a new purchase. The 5-year deal is with Barclays at the top there. It's slightly better, 4.37%, which isn't bad. Again, these rates are improving. A year ago, these were 6.5%. The fees are 995 on this one. The loan to value is 75%, which is not bad, right? I would take that deal in this market. 2-year deal, NatWest being really competitive on this one. 4.59, which is a better deal than we've seen in recent weeks. The fees are 899. Loan to value is 75% as well. So I think if I was on a residential mortgage and I was considering waiting, thinking, you know what, rates are going to come down at some point this year. They're not going to come down that much. So I'd take a deal like this. Would I take a 2-year or a 5-year? I'll be making a video on that this week, so look out for that. But if you took a 2-year deal, then if rates do drop, if you believe that rates are going to drop, you're in that camp, then you can get a better rate in 2 years. If you're confident that rates aren't going to improve much in the next few years, go for the 5-year deal. And then you've got the certainty. That gives you that option there. So, residential mortgages with just a 10% deposit now. So this is people purchasing, or maybe you bought in the last couple of years and you bought a new build and it hasn't gone up much in value. So you've only got a small equity stake in there. So HSBC have got the cheapest deal at the moment for 5 years. It's 4.65%, which is not bad. Again, it's not... when we do this, a lot of people will comment and say, well, I was on 2%. Yeah, you were. That was when rates were at historic lows. That's not coming back for a while. So the 5-year deal is 4.65%. The fees are 999. Loan to value 90% with HSBC. They were in the news this week for cutting rates. Loughborough Building Society first showed up last week. I hadn't heard of them before that. But they've got the best deal on the 2-year residential mortgage with a small, I'd say this is a small deposit. It's 5.05%, 999 in fees, 90% loan to value again. So not massive differences over last week, but I think the rates haven't gone up, which is good. No one got more expensive this week, which was nice to see. And so my advice, as I said at the beginning, is if you've got a deal coming up, fix a rate today. Then if rates improve, before you start the new deal, move on to that better rate. That is the advice that I want you to share with people and let people know that is what you should be doing. It is a volatile market at the moment. Inflation has just risen in America. Is it going to go back up in the UK? Potentially, yes. So we've got to look at that option of rates being volatile. Now, do I think the Bank of England rate's going to go up or the Federal Reserve rate? No. But what I was talking about was something called a swap rate, which is the rate that the banks borrow money at, right? Those, with inflation going up in America, could potentially get a little bit more volatile. So that's what I'm saying. Fix a rate now, just in case they go up over the next few months. and then at least you got the best rate that you could get. And if a better one comes out, switch on to that. Anyway, that's it this week. Let me know any deals that you found that are better than these. Really, it will help the community the more we collaborate and share stuff together. Do smash the like button, tickle the like button. I don't know, whatever you need to do to that like button, do something to the like button. That helps us. And share this video. Click the share button and share this with someone that you know is looking for a mortgage right now. Do check out all the other content on my channel. Maybe go and watch this video right here.